The Dow Jones plunged over 1,000 points in a single session as Brent crude surged past $90 per barrel. Initial midweek diplomatic hopes dissolved into a dual threat of energy-driven inflation and a surprise contraction in U.S. employment. Despite brief tech rallies, the market ended the week diagnosing a looming stagflation trap. Energy and geopolitical tensions escalated as the Strait of Hormuz remained closed for 7 consecutive days. This disruption blocked nearly one-fifth of global oil shipments, prompting warnings of potential $150 crude prices. While President Trump pledged naval escorts for tankers, actual supply tightness pushed WTI above $90. Energy-sensitive sectors like airlines suffered while producers and pipeline operators gained on supply fears. The resulting energy shock has effectively reset global inflation expectations. The U.S. economy unexpectedly contracted in February, missing forecasts for a 55,000 job gain. This labor weakness coincided with rising hourly earnings, creating a complex policy dilemma for the Federal Reserve. Bond traders pushed the 10-year Treasury yield to a 3-week high as inflation risks remain sticky. Markets now price in near certain pause in March rate cuts despite the slowing economy. Rising mortgage rates have further cooled the housing sector as lenders price in persistent volatility. AI and technology, specific AI leaders decoupled from macro pressure through massive upward guidance and strategic partnerships. Marvell and Broadcom reported explosive demand for data center networking and custom chips. However, the broader sector faces headwinds from rising electricity costs and new AI chip export restrictions. Oracle and OpenAI scrapped a major 2-gigawatt data center project due to financing and strategic shifts. Investors are now distinguishing between pure AI hardware winners and firms burdened by high capital expenditures. Next week, markets will transition from growth-focused buying to a defensive focus on the March 11 inflation reading. Persistent energy shocks will likely keep the 10-year Treasury yield elevated, testing the valuation floors of tech stocks. Key variables include the February CPI data, further diplomatic signals regarding the Persian Gulf, and the Federal Reserve's response to the surprise labor contraction. The market remains trapped in a stagflation narrative where energy spikes collide with a weakening U.S. consumer.